I know you think that emerging markets are decoupling from China's. What do you mean by that? Because in my mind, they're sort of inextricably linked, simply because the supply chains, if nothing else.
Yes, of course, you still have linkages, but what we've seen really is that some of these linkages are getting a bit less pronounced than they used to be. So China was a significant motor or engine of growth for instance, commodity exporters in, say, Latin America in previous cycles. And that is a bit less pronounced because also the emerging market space as a whole has changed. So the country mix is now a bit more balanced between, say, commodity exporters and also countries that import commodities. So it's not so strong anymore that you need, a strong demand for certain construction materials, say, which we probably won't get this time around, for emerging markets to do well. So you have a lot more domestically fueled growth. For instance, in Asia, you have countries like Indonesia, like India. They are seeing very strong domestic growth momentum right now. So that is slightly less dependent probably on China, on the US as well. So the US used to be a lot more of a driver, which also has gone down in importance.
Hi, Sabrina. On the currency side, very interested to hear your thoughts about the possible policy shift that's been heralded by the Bank of Japan and the prospect of a more expensive yen and importantly for EM, what that does to some of the high yielders in the carry trade.
Yes, hello, Sri. Yes, of course. So on the currency side, we have been liking overall a weaker dollar for quite a while. So we had a bit of that move happened earlier in the year. And then kind of things stalled again with largely the US data really being still fairly robust and the Fed still having to hike this kind of marginal additional time, which we're still seeing, and possibly we could see another hike later in the year from the Fed, although it's not our base case at this point. But so that was our proposition. But right now we're a little bit more mixed and playing currencies more from a relative value point of view. So we like some of the higher yielding currencies in emerging market, in particular places like Brazil, Mexico, but also Indonesia, India, etc. And we have on the other hand, we have short position in other currencies, for instance, Turkish lira, for instance, Taiwan. So it's a bit more of a mixed picture for us at this point. We're still expecting a weaker dollar, but it may have to wait a little bit longer. And the yen, as you mentioned, is a very interesting one in this mix because, yeah, we could see more strengthening of the yen further down the road, potentially, if policy there changes more significantly. And that could have also positive implications on other Asian currencies. So in particular, I'm thinking about Chinese renminbi here in this context.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to the channel for more. Thanks for watching.